Good day, everyone, and welcome to another investing video on Moementum Finance channel. Today, we'll review top 5 ETFs to invest in the US Dow Jones Index. We'll compare the ETF costs, number of holdings, dividend yield, and past returns, and provide you with the succinct information to be able to make an informed investing decision. Of the ETFs we'll review, 4 of them are traded in US dollars, but 1 of them is traded in Canadian dollars. Dow Jones, or more precisely, Dow Jones & Company, is one of the world's largest business and financial news companies. Besides the famous Dow Jones Industrial Average, the company also created various other market averages. The Dow Jones Industrial Average is a stock market index that tracks the performance of 30 large companies listed on stock exchange, like the New York Stock Exchange or NASDAQ in the US. These companies, which are also known as blue chip companies, including American Express, Microsoft, and Boeing, tend to include companies with a long proven history of regular earnings and financial stability. So a Dow Jones ETF simply includes fractional shares of these 30 companies in the same way that they're distributed in the Dow Jones Industrial Average. And if the Dow Jones rises, so does the value of the ETF. Similarly, if the Dow Jones starts falling, so does the ETF. Before we continue the video, I have a favor to ask you. I have put a lot of time and effort to put this video together, and in return, I appreciate if you can give this video a thumbs up and subscribe to Moementum channel. Thank you. Alright, back to the topic of this video. Here are the 5 ETFs that I'd recommend to invest in the United States Dow Jones Index. We'll review each of them more closely and compare their pros and cons in the next few minutes. Let's get into it. The first ETF to review is SPDR Dow Jones Industrial Average ETF, the ticker symbol DIA. The SPDR, also known as DIA, is the biggest and probably the most popular of the Dow Jones ETFs, with over $30 billion in assets under management. It also has an annual expense ratio of 0.16%, which makes it an appealing choice to investors on a budget who still want a piece of the otherwise quite expensive Dow Jones pie. The fee of 0.16% means if you had invested $10,000, you'll pay a fee of $16 in a year. Because the Dow Jones consists of companies that usually pay dividends to investors, so does the DIA. But in comparison to other ETF, this one distributes dividends on a monthly basis. It's been around since 1998 and has a proven history of tracking the Dow accurately, if that's precisely what you're looking for. Currently, the ETF has a dividend yield of 1.03%. DIA tracks a price-weighted index of 30 large-cap US stocks selected by editors of the Wall Street Journal and has 32 holdings. This ETF is showing a 5-year cumulative return of 92%. The second ETF to review is iShares Dow Jones US ETF with ticker symbol IYY. It is another large Dow Jones ETF which aims to track the investment results of the Dow Jones Index composed of US equities. This offers exposure to both larger and mid-sized US companies and currently has $1.66 billion in assets under management. Furthermore, with an annual expense ratio of 0.20%, it is still quite a budget-friendly choice for investors. Currently, the ETF has a dividend yield of 1.12%, and it tracks a broad, cap-weighted index of US companies covering 95% of the US market. This ETF is showing a 5-year cumulative return of 106%. The next ETF to review is ProShares Ultra Pro Dow 30 with ticker symbol UDOW. UDOW is an ETF for investors who like to lean more heavily on the more risk, more reward principle. The fund seeks daily investment returns that correspond to 3 times the daily performance of the Dow Jones. UDOW is a so-called leveraged ETF, which means that it trades multiple times throughout the day. By doing this, the aim is to increase the exposure to and impact from the underlying index, which in this case is the Dow Jones, and hopes to take advantage of the changing prices of the fund throughout the trading day. Of course, this is also associated with more risk. That's why financial advisors usually suggest to not hold on to leveraged ETFs for too long, which also makes it relatively high annual expense ratio of 0.95% more of an issue. UDOW currently has $1 billion in assets under management and has a dividend yield of 0.13%. This ETF is showing a 5-year cumulative return of 317%. The fourth ETF to review is Invesco Dow Jones Industrial Average Dividend ETF with ticker symbol DJD. DJD is a bit different than the other ETFs on this list because instead of tracking or trying to beat the Dow Jones directly, it follows the Dow Jones Industrial Average Yield Weighted Index, which selects the securities that have paid a dividend over the past 4 quarters from the Dow Jones Industrial Average. So rather than weighing holding by price, the underlying index ranks them by dividend yield. DJD currently has 27 holdings and has a dividend yield of 3%. This ETF is relatively small compared to the others, with only about 165 million assets under management, but has a low expense ratio of 0.07%. This ETF is showing a 5-year cumulative return of 62%. Lastly, the 5th ETF to review is one in Canadian dollars. BMO Dow Jones Industrial Average Hedged to Canadian Dollars Index ETF, the ticker symbol ZDJ. ZDJ has 31 holdings and pays a quarterly dividend distribution, currently yielding 1.51%. This ETF charges a fee of 0.26%, which means if you had invested $10,000, you pay a fee of $26 in a year. This ETF is showing a 5-year cumulative return of 80%. All these ETFs can be traded through popular brokerage accounts, and if you are a Canadian investor, you can use the referral links in the description of the video to open an account and get a referral bonus as a result of that. Are you currently investing in any exchange-traded funds? What are your favorite ETFs? Let us know in the comment section down below. If you'd like to learn more about investing in the stock market and following the latest news of hot stocks, including penny stocks, growth stocks, ETF investing, and dividend stocks, don't forget to subscribe to our channel. Here on Moementum Finance, we post several videos every week about investing and financial freedom. I appreciate it if you can give this video a thumbs up, and I hope to see you next time.